Record this. So I'm done with the trend line. So I had said you should submit the last assignment. Suppose you didn't understand. I hope you should be able to, after today's lecture, the last lecture we just finished from, should be able to go back and revisit the assignment and do it. All right, let's look at this here. What am I saying here? Okay. So let's look at lot sizes because that is important. Now, according to your equity is the same thing as your account balance. So let's say from $100, which is always within our range of amount we can fund, from $100 to $1,000. Let's look at that. In case you don't understand about lot size, go back to the group when we cover the theoretical aspect. Go back and also revisit that lecture. We talked of micro lot size, we talked about standard lot size, and we talked about the other one. So you know that when you are trading from 1.0 lots to 10.0, that's a standard lot size. So anything from your 0.01 to 0. What? 0.99. Which I can't hear the voice feedback. My mic is not mute, so it's probably from your end. Okay, so now if you are given $100 account or you fund a $100 account, basically what's on a scale of your account size, what you should be targeting on that account should be between, with proper risk management, should be you trading it with 0.01 and 0.2. At most, so that if the market did not go in your direction from your stop loss where the market is heading to your stop loss, if it doesn't play out, at least if your stop loss is from 10 pips or to 5 pips or whatever, you know you are losing just $5 or $1 or whatever it is. So that is it. So if it is moving against you by 100 pips in your direction, you know you are losing just $10. And if you lose $10 from $100, you could recover it quickly. But when you lose $50 from your $100 account, then automatically you need a higher risk to recover this account, and which the chances are 50-50. In the process of going to flip the account could get blown, or one thing or the other could happen. Sorry. So now that is that. So how do you set your lot size? The first thing you're doing when a signal is dropped is set your lot size, because don't make mistake. That is the first thing. There are times that with that pressure to trade, instantly, okay, the market is moving, and you don't know that the lot by default was set on 1.0 lot size. So let's go back. So since the account was small, by the time you jump into this trade, this is NZD USD. This is how you do it. you click the plus sign. Whenever signal is given, you could see now. The last time trade was taken on this account was taken with 2.01 lot size. Now a new trade wants to be taken and the pair leverage is not the same. This is NAS 100. So imagine trading NAS 100 with 2.01. And when you go in, the market is taking you to another level. It can blow your account. So what I'm trying to say is the first thing you have to do is before you start taking your trade to buy and sell, learn how to set a lot size, changing it. Suppose the last time you traded 2.1 based on the kind of market you saw, or it was a scalp, that was why. And also now I am trading a more higher leverage pair, like all those pairs like gold, NAS. These ones are pairs that even with the lowest lot, you could make money from it big time. And if it wants to give you losses, it could easily blow your account. So, but that is not where I'm going to. Right now, what I'm trying to say right now is the first thing before you, once a signal call is given, buy NAS or sell it, though it's looking bullish. But at that point where it's heading to this trend line, I think it should give us some pullback. Then if the buying pressure is much, then we'll look at it, because if it climbs this trend line, then we are looking at it moving all the way to this point. So now a signal call is given, buy NAS. Don't be in a hurry. Set your lot size from here. So I've told you that from a kind of account size, I will send it on the group, what you should trade, the lot size should be taken, that should be taken on various accounts. If this is NAS, I know that it's a high leverage pair, and where I'm taking the entry, at most, it's supposed to pull back at that point. So, but if suppose the market keep pushing upwards, I'm thinking of how I will calculate my stop loss. So now it's still buying, and someone that want to scalp it will be looking at this point here where price is pushing. So now I could either wait for the market to complete to this point and now enter a sell. That is the best entry for this trade, because I'm seeing this tip of this candle wick that once price comes here, it's going to struggle to push out of it. So normally the market moves and give you pullback. So I can just set a defined lot size there, that once it hits there, in case it's not buying and it begins to pull back, I'll scalp some profit. But that's not what I'm trying to show you. So, but the other way of telling you that the lot size I want to trade this pair now, since the market is not due for sell now, is that I will calculate that suppose I enter a sell here and the market decides to complete its circle up to this point before coming back to my entry, what kind of lot size can I put here? So the lot size I can put at this point here is, at least I would think of a range of 0.1 to 0.3, so that the highest NAS can minus me as drawdown if the sell does not go through. Before it hits my stop loss, I am hoping that the market should retrace back to this candle wick. That is between now and tomorrow. The next candle that should be opening should come back to this point. This should be acting as a support for it to either push forward or downward. So let's do some calculation now. So now I won't try this lot size, because if it doesn't sell, I want to sell it. If it doesn't sell with 2.0 on a higher lot leverage pair, it could be giving me up to minus $2,000. So for the sake of calculation, I will now set a lot size at least 0.5. Let's try 0.5. because based on the equity I have, this is a demo account. I'm using it for us to have our lectures. The demo account, it should be up to $10,000. So 0.5 from where I'm entering, the market cannot move and minus me up to $10,000 at a stretch. It's not possible. So I will sell there. Remember, I have adjusted my lot size. So I've adjusted my lot size. Look, I'm in profit instantly. You can see that. So I've sold from there. Instantly we're in profit. So at most, this is where I will put my TP. I'll keep my stop loss there because I know that the market is struggling to come to this place for the first time now. So it won't just have enough trend to go out of this zone. It's going to struggle. So I have chosen a lot size that at most, if the market violates this zone to go and hit my stop loss, it can only take between $200 to $300 loss. It's going to close at that point based on my standing or my current equity. The current equity here, let's look at the current equity. Okay, this is $100,000 demo account. So it's worth the risk. We're even in profit. So with that lot size, you can't even blow the account. So you choose your lot size and what you are thinking the market should do. That is what you risk at a time. So I taught you the other way that when you are taking a trade with a signal call, how you should do, that you should always set your stop loss. But I didn't set the stop loss. It's now I want to set it. How do I set it when I've entered the trade? I told you where you should calculate. This is where my TP will be, and that is where my stop loss since I'm selling. So I'm seeing that price will still come back even to this level. By tomorrow, price will come back to settle here before it starts moving. But I don't want to be demanding too much from the market. So I'll put my TP very close, and then I want to copy it from here. Now, when you have entered a trade, how do you go and correct? How do you go back to set your TP and stop loss? That is that you just simply go to your trade that are running. Imagine 0.05 is giving minus 50. So now I will now go to modify order. I will set TP for it, paste it. Now I've set TP. I can close this trade. I can go and do whatever I want to do, but I've not put stop loss. So that's the last thing that is left. So my stop loss will be at that point. So I am going back to set the stop loss. Once I set the stop loss for this trade, that means I don't need to be on this chart to know when to close it. I've told the market once price hits this level, take profits or stop the trade from entering into further losses. So that is it. So this USD card, I think I should close it because we just were in a lecture. I just opened buy and sell at the same time. So I will close this. You always close a losing trade. You hold a winning trade. All right. So that was that. I was talking about lot size. If I'm trading a $100 account, then you should know by calculation the lot size to use on a $100 account. And then if you are swinging also, I will teach you the other one. But for now, let's go gradually. That is how we should go so that we don't compound things. All right, so Do you have any question? If no question, I would like to continue. But I'm going to send a chat to the group of what lot size you should use for your different accounts. But don't forget, the main point of this subject of the subject of a discussion here was that once you want to go into a trade, you should first of all set a lot size. You are going into a trade. Set the lot size first. Because the last time you entered could be because you want to scalp, you used a bigger lot size. But now the case is different. So I won't want to continue with the lot size I used the last time. So there's need for you to adjust your lot size and then execute the trade. Don't be in the habit of like to be in pressure or one or two things to quickly execute a trade without setting or modifying your lot size. It could be dangerous because by the time you dive in, you have opened a standard lot on $100 account. Sometimes if it's the first time of you trading that account, the thing could be on a standard lot, and trading a standard lot on a big account, that is too heavy, that's too much. So it could, by just few pips, it could blow your account before you come back to know what you have, what lot size was on. So you have to be conscious about that. Don't forget that point made. All right, next, let's see the next thing here. I'll give you room for question, because if you don't have question, we continue. Do you have any question? If you don't have, at least I should hear a no so I can forge ahead. Continue or wait for questions.
No questions.
All right, next thing we want to look at, let's look at breakouts. So when we're talking about breakout, is that from a point of a newbie, we teach you resistance, we teach you support. Sometimes the first day you make trades on your demo, you're happy, but later on you discover it's not that too straightforward as one thinks. Because if Forex was as straightforward as, then everybody would have been successful, everybody would have been a millionaire or one or two things. But at the end, out of the 100% that goes there, only 5% comes out successful. So let's look at breakouts. For example, if you put a line here as your resistance and this is your support, whenever the market comes here and instead of the market stopping here, the market violates here and is above this point, we call that a breakout from a zone. So we call that either a resistance breakout or a support breakout. So you are waiting all day long for market to come here so you can take a buy, but the market came here and left here, and so that is a breakout. And in our advanced lecture, we'll look at false breakouts and the real breakout, because they are false breakout. Remember, I told you about corrections from the last class. So there are times that the market makers are wanting to take small account out. So you might take a buy here, but they just trick that support and extend things a little bit based on the pressure of the selling pressure. So you were looking at a support here. That wasn't wrong. But what I'm trying to say is the market makers believe that the small account must have entered there, but the way for them to take them out early enough was that those that entered early, they tried to extend things a little bit, but that doesn't mean that there is a clear breakout yet. So now, you that you were selling, instead of the market buying was selling, and you're enjoying the sell, you are still not safe because you have a breakout, price close out of a support. We need to know if it is a fake breakout or there's just a correction at that point, then the market begins to bounce back to buy again. Or the market just broke out of a resistance point, there needs to be correction. Like for people who started selling here, they try to trick that zone a little bit by pushing things here so that small account get blown easily, and then they now move it hard to the downside. So you won't want to call this first a breakout. It could be that it's a fake breakout and then price returns back to the channel. When it returns back to the channel, in the normal process it's supposed to go, I told you that it's called correction. Then when it out of that zone completely for the next couple of days or whatever, we have a breakout. So we will learn how to spot fake breakouts and the real breakouts. And that is it, out of when we say price is out of a zone. So you could see that things are getting a little bit complicated. Yes, it's not just as you were thinking. All right, so let's spot a breakout from the daily time frame. Originally, this was a support here. We could buy from here, but the next time this market started coming here. However, we don't know why they decided to violate the support here and took people who were selling, who were buying here to this point. Just some extension. Took people to this level. That means people who started buying here, by now, if they had risked too much or without putting stop loss, they are 80% their accounts are blown. Then now, the next day, price could not climb the support that was broken. So this is called a clear breakout because price left out of the support totally, closed. The candle closed out of, when we say the candle closed totally out of this place, this is where market was moving. So we are, if we are to measure this point to here, it's not the same. So it went a little bit downward, and they didn't sell it again or started moving upward. So now that price has climbed that very support, it's possibly, we won't say this was a fake breakout. It was a breakout, but we now had price coming back to here. We had a correction of this support because price has come back here. So we now have a new, or the highest support is now here, while the next to this one is now the next support back because price has gone back there. So we call this, we had a breakout and we had price coming back to the support. We had a correction back to the support with a buy. So those are things we look at. So let's look at resistance. All right, we look at this zone now. For example, are you guys following? I just have 10 minutes here. Are you following? Hello?
Yes, I'm following. I'm here.
All right. So what happened here was that the market was respecting this point. This is a daily time frame for Euro USD. The market was buying and was buying and was selling at this level, was selling, and the market sold hard up to this point. But the next time the market was coming, it was coming with a strong push from this zone. And when it came here, it just delayed for like 1, 2, 3 days. And the next time price climbed out of this zone totally. So we call this a breakout. So price climbed here. And then when price climbed that point or at that level, it's never returned. So there was no, it wasn't a fake breakout, but it was a clear breakout because from this point, it kept moving upward. So that was a clear breakout. But if it finds its way backward and start coming to sell again, then that was a fake breakout, or we call that just correction or manipulation. So this was a total breakout because after price closed, the candle was ahead of this zone. What happened was that after, okay, I'll teach you that. So when we have breakout, there are rules for it. For everything in trading, you have to set rules. When there are breakout, what we call, we tell you, you wait for retest. You wait for markets to come back to that point because there were people that sold here. So, however, the market used to give you a second chance that if you enter wrongly by 1 or 2 calculation or sometimes due to manipulation, the market could still favor you. And if you were selling here and the market started buying, after some days, you held the trade in drawdown, the market did return back here. We call that retest. After a push out of a zone, we wait for it to retest, for it to come back to that point, because when it comes back, it forms a wedge for it to push harder to the next level. So the next time price comes back to the zone, that is when you take a buy. So instead of when we have a breakout that is not fake, instead of we selling because you thought it's a resistance, you follow the trend, because we learn how to follow the trend because the trend is your friend. So we now decide to take a buy decision to go with the market wherever it's going. So that is that about breakouts. So we call it fake breakouts. We have the real breakouts, and we have corrections. Remember, I told you the real or the proper breakup is when the candle closes ahead of the zone and the market does not go below it again. Whatever it was playing around, as long as it continues outside the zone going ahead, that is a good breakout. Then the fake one is the one that you accidentally follow the market, hoping that the market is still buying, and then you go and buy, the market reverses, and then it starts. In fact, you don't want, what you want to do, what you don't want to do, you don't want to be buying when the market is selling. You don't want to be selling when the market is buying. And you don't want to go and enter a buy where the market will start moving up to 300 pips against you, because no matter how big your equity is, it can wipe it off. What was it? So part is that. Any question for me? I think this is just 1 minute left for this to go off. Is there any question? I think we are going to stop here and we continue tomorrow. So please do your trend line assignment. You can see we're beginning to go into deeper things. So we're not playing now. So do that assignment and post it on the group for me. Thank you.